Welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 key headlines. I'm Reema Tendulkar, and these are the headlines for the day. Positive global cues and a strong rally in financial stocks lifts the Wall Street. The Sensex gains nearly 500 points, the Nifty up over 100 points. Rupee remains on a tight leash against the dollar. HDFC Bank makes a comeback with growth and margin expansion. Bajaj Auto sees a rev up in margins even as sales come mostly in line. ACC fails to deliver in Q2, but the stock ends in the green. While low volumes and higher costs hurt Shree Cement in Q2, the stock is down 1.5%. Avenue Supermart, Tata Elxsi, Butterfly, Gandhimati and Oberoi Realty tag after they failed to deliver in the second quarter. In stocks and news, Blue Star gains after Phillip Capital gives it a buy rating. Ventura initiates coverage on IRB Infra. PBR delivers a mixed bag in Q2. And here's the lineup of what we have for you in store on Markets Today. It's a power-packed show and market opinion. We've got Mark Matthews of Bank Julius Baer & Co., who says that the Indian markets is better placed than the U.S. markets. In big corporate voices, we have H.M. Bangur, Chairman Shree Cement, to talk about the company's performance. So let's get straight with the stock market action then. Positive global cues and a late rally in financial stocks help boost the sentiment on Dalal Street. The Sensex gains nearly 500 points, the Nifty inching up more than 100 points. It's the Nifty Bank which has really outperformed today, with the index up close to about 1.5%. Prashant is here with the market wrap.
Well, the market did just fine. I mean, actually it did very well, given the fact that on Friday out of Wall Street, what came out was deep red, 2 and 3% cuts on the S&P 500 and the Nasdaq. But here, the market, after the first 2 hours of volatility, picked a trend, and the trend was on the upside. It kept going, ending above 17,300 on the Nifty finally. Financials, as we've been pointing out, are the strongest part. Earnings are tying in nicely. So private bank index, the PSU bank index, the PSU bank index was up almost 4%, and the bank Nifty too. SBI, ICICI Bank, Axis Bank, IndusInd Bank, Bajaj Finserv, I can go on. That's the part of the market on the Nifty which did very well. NTPC, Bajaj and Reliance Industries were the other stocks which participated, not banks, not financials. Metal started lower. They were under pressure through the course of the day. Hindalco, JSW Steel, Tata Steel are some of the other losers. Well, market breadth came off quite a bit, and there were more losers than stocks which were gaining by close, but not by that much. In any case, Tata Elxsi was a big loser on the back of earnings. It's the first miss for the company in 2 years. Oberoi Realty started lower, ended lower. Garden Reach, which has been a huge outperformer, gave up gains. Navin Fluorine, Delivery, Credit Access, Heidelberg, of course, reacting to numbers which came in the second half of the day. But there were gainers as well. Adani Green was up 4-5%. Canara Bank was up in the PSU bank space. IRB was up 10%. Deepak Fertilizer, Data Patterns, Metro Brands are some of the names on the upside in the broader space. Pretty vibrant session. I think the first stop, of course, for the market is going to be to hold the 17,300 level for the index, and then you get to 17,400, 17,421, which is an important retracement level of the September fall. I think in this context, the global remains important. It's just that on days when U.S. market falls aggressively, we fall less. And when the U.S. market rises, we sometimes participate in full, sometimes actually do even better. So that relative element of outperformance still very much here. Back to you.
Okay, let's get you some expert opinion now. Mark Matthews of Bank Julius Baer & Co. says that he continues to be constructive in the Indian markets owing to the large domestic investor base and a positive capex cycle. He added that we're now entering the final months of a strong seasonal trend in the market. Listen in.
India's done much better than the United States, and I continue to be constructive on the Indian market. I'm aware of the arguments that are made against it, primarily valuations and higher rates, but I think overriding that is a large domestic investor base and a positive capex cycle that should last a couple of years. Best time in the market is typically the beginning and the end, and we're entering the final months now, where October and November and December typically are very strong months seasonally. So unless we have some kind of kind of Lehman-esque, Lehman Brothers type event. And I must say that the cracks forming in the UK are somewhat disturbing and something we do need to watch closely. But barring that, if you look back in history at other years when the S&P has been down so much up until this time of the year, with the exception of 2008, they rallied strongly into the end of the year.
Let's get to the second headline now. Bajaj Auto ended the day close to 2% in the green after the company's strong second quarter numbers. Sonia's here with the details. Sonia, what were the standout features in the numbers?
Well, thanks a lot for that. Now, here are 5 reasons why Bajaj Auto did well in trade today. 1, the numbers were quite good. Overall, it was a revenue growth of 16.5%, despite the challenges that Bajaj Auto is facing in the export market. And the margins for the company have improved because of a falling raw material costs and better forex realizations. The second reason is that the margins are expected to improve further because of the lag impact of raw material prices cooling off and forex realizations picking up. So, on an average, if you look at it, same time last year, margins were at 14.2%. They've picked up to 17.2%. So there's a steady improvement that we're seeing there. The third reason is that the company believes that the worst of the export fall is behind them. In fact, they said that exports will get better from here on a quarter-on-quarter basis. And the strength in the export business is something that could continue through the course of the year. The fourth reason is that even in the domestic market, the management has said that September retail sales were better than July and August. Although they are a bit cautious as we head into the festive season, they are expecting just a single-digit growth for the industry in the festive season this time around. And the fifth reason is most brokerages continue to have target prices which are well above the current market price. On an average, the target price that brokerages have is anywhere between 4,100 to 4,500, with Goldman Sachs being the most aggressive on the street, although a couple of brokerages have gone ahead and cut their target price, but still well above the current market price. Back to you.
As you know, quarter 2 was a record-smashing quarter for us. We have achieved our highest top line and our highest EBITDA in rupees crores ever. Of course, it was aided by pipelining the stocks in the domestic market. But nevertheless, given all the stuff which was going around, it's a very, very delightful performance from our point of view. And going forward, our whole approach is to maintain both the top line and the bottom line and the profitability as we go forward. The demand in domestic is still muted. It is not negative, but it is very marginally positive during the festive.
Let's also talk about HDFC Bank, which has delivered a strong quarter with a net interest income at a 13-quarter high. Now, over the earnings con call, which took place over the weekend, CFO Srinivasan Vaidyanathan was heard saying that the big merger of the HDFC twins could witness completion by the second quarter of next year. Listen in.
Are we on the timeline? More or less, we think we are on those timelines. Maybe there is a quarter or a few months early. We have previously indicated September, call it Q2, Q3 kind of a time frame. Maybe the way it is going, it may be Q1, Q2. So that's where I would put it. Maybe there is a few months it's running ahead, but not a big deal on that front. But there are still lots of processes left, right? Which is after the EGM is done, we need to file a scheme petition with the NCLT seeking their approval. Again, the scheme should be in line with what the shareholders approve, and that's what goes finally for NCLT consideration. This could take 6, 7 months, 8 months, the entire process after the shareholders approval.
Let's get to the third headline then for the day. Shree Cement fell 2% after lower realizations and higher costs hurt the company in the second quarter. Nigel is here to take us through the key numbers and the highlights. Nigel.
But let's start off with Shree Cement then. Those numbers were clearly disappointing. On the top line, there was a bit of a miss, and on the margin front, there was a miss of close to around 120 basis points. The key reason should come up for you. Well, volumes appear they were in line. The problem was in the sales mix. That is, they sold a higher amount of clinker, and a higher amount of sales came in from the non-trade segment. Now, that effectively pulls down realizations, and that's why the realizations contracted by close to 9% on a sequential basis, while the street was bracing for a contraction of close to around 5%. To make matters worse, the costs continue to remain elevated and the power and fuel cost was sharply higher on a year-on-year basis. That's what resulted in the EBITDA per ton coming at the lowest we've seen in nearly around 28 quarters, as per some brokerages, coming in at only around 700 rupees. Remember, in the past year, same quarter last year, it was more than double, close to around 1,420 rupees odd. Brokerages, Morgan Stanley, they trimmed their target price, but they remain overweight because they believe that the company will do well in this cycle, both on realizations as well as on volumes. While Jefferies, they pull back, their EBITDA estimates for the next couple of years, and they have a hold rating on the stock. Well, the management joined us and they said that they are expecting volume growth of close to around 10% for the year. They're expecting the EBITDA per ton to improve to around 900 to around 1,000 rupees. And they also clarified that they're not interested in JP Group's assets. Well, let's hear out Mr. Bankur.
Prices will be increasing when the natural demand will come. Right now, it should be after November 15 or so. The demand should be good. First half of the quarter is good monsoon, so that will have the good result in the year end, but not immediately. Immediately, the sales is little affected. Festive season is there. So we expect very good results from mid-November onwards. Right now, the costing also should decrease from December because the old stocks of coal are there with almost everyone. So I expect this quarter to be little better than the last quarter, but January, March should be a good quarter. In the first half, our volume growth is around 13%. So we expect 12 to 13% growth, but a little bit conservative. So I am saying 10%.
Okay, ACC is another one in the cement pack which reported numbers. While the numbers were weak, especially on the margin front, the stock closed higher. Nigel is still with us to fill us in with the details. Nigel?
Well, moving to ACC then. Well, those numbers were disappointing. On the top line, it was more or less in line. The problem was on the EBITDA front. It came in only around 16 crores. We were working with a number of more than 250 crores. And margins just marginally went into the green. The other problem was that they delivered a net loss that compared with the net profit that we were expecting. A few reasons should come up for you. On the volumes front, there was a 2% miss in comparison to what we were working with, and power and fuel costs continue to remain elevated. So on a year-on-year basis, it was sharply higher. The problem is that on a sequential basis, it didn't cool down one bit. The RMC business is only around 10% of revenues, but just take a look at that. Marginally delivered some profit of only around 1 crore. Otherwise, it's more than 10 to around 12 crores odd. But the stock recovered in trade. Why is that? Because it was down close to around 20% in the last 1 month or so in the run-up to its number. So that's point number one. On a valuation parameter, remember this is one of the large cap cement names which is relatively inexpensive. That's it trades at an EV per ton of close to around $115 per ton, which is nearly replacement cost. And finally, the street is factoring in a big recovery in the second half of the year. They also have a new promoter, so they're expecting things to turn around. All these factors put together, though the numbers are disappointing, the stock recovered in trade today.
Thank you very much for that. We'll slip into a very short break, but stay tuned. We'll be back in a jiffy with the other headlines.